Hello friends. Friends, we will continue with a chapter on admission of a partner. We are nearing the end of this chapter now. We have one last topic left. So what we have discussed is, we discussed about the new profit sharing ratio, then we discussed about the sacrificing ratio, then we discussed about goodwill, revaluation of profits and losses, and then the accounting treatment of reserves and accumulated profits and losses. So friends, before going on with this last topic, I would suggest that you must go through the previous lectures of this chapter, right? Because these are going to help you in the last topic. Okay? So what is the last topic is adjustment of capital. Adjustment of capitals. Now, what do you mean by this? Suppose you and your friend go to a pizza corner, right? And you order one pizza in which there are 8 slices. Clear? You and your friend go to a pizza corner and you order one pizza in which there are 8 slices. Now what you do is, out of these 8 slices, you take 5 slices and your friend takes 3 slices. Okay sir, fine. Now, when the bill comes, this is the time now for the payment for this pizza, who will pay more? You will pay more or your friend will pay more? Very basics, general basic. You will pay more or your friend will pay more? Obviously sir, you ate more pizza, right? You are having more slices of pizza, you will pay more. Is that clear? You and your friend go to a pizza corner, you order one pizza having 8 slices. Out of those 8 slices, you are having 5 slices and your friend is having 3 slices. Now who will pay more? Obviously sir, you are having more slices, you will pay more. These are the basic manners. Clear? Now, talking about the business, if we talk about the business, I'll say the pizza is equal to profits, right? And pizza payment is equal to capital contribution by partners. Now, what does it mean? The person who is having more slices of pizza, he will pay more. Replace pizza and payment with these words. I will say the person who is getting more share in the profits, he should be contributing more capital in the business. Is that clear? I should say the capital of the partners should be according to, or I can say proportionate to the share in profits, proportionate to their share in profits. That means the person who is going to get more share in the profits, he must contribute more capital, and the person who is going to get less share in the profits, his capital contribution should be according to that. Now the question is, why we are studying this on the admission of a partner? Why we are studying this on admission of a partner? So because when the new partner will come, he will bring in some capital. This you all know, when the new partner will come, he will bring some amount of money as capital. So right now when he brings in capital, we have to see that the capital of all partners should be according to their share in the profits. After the admission of a new partner, I'll say after admission of a new partner, the capital of all partner means including the new partner, should be proportionate to their share of profit. Clear? Why we are studying this in admission of a partner? Because we have to see that after the admission of a new partner, the capital of all partners should be proportionate to their share of profit. Clear? Now, there are two methods of doing this. What is method 1? Method 1 is, on admission, old partners will adjust their capital, the old partners will adjust their capital on the basis of capital brought in by new partner. What it says, that on admission, old partners will adjust their capitals on the basis of capital brought in by new partner, so that the capital of all the partners should be proportionate to their share of profit. Clear? Now, we will discuss this method only in this lecture. Right? I'll tell you the method 2 later on. In this method, the new partner will bring in his capital. Right? He will simply bring in his capital, and whatever capital he is bringing, the old partners will adjust their capital according to that. What is meant by adjustment? That the old partners will either bring some share into capital or will withdraw some part of the capital to make it proportionate to their share of profit according to the capital brought in by the new partner. Right? I know at this moment you people must be confused. So what are you saying we are not getting? So let's see with a practical example. You will get. Okay? You will be able to understand this with this practical example. See. It says X and Y are partners in a firm sharing profits in the ratio of 3:2. The remaining capitals of X and Y after the adjustments are 80,000 and 60,000 respectively. They admit Z as a partner on his contribution of 35,000 as capital for 1/5 share of profits to be acquired equally from both X and Y. Clear? The capital accounts of the old partners are to be adjusted on the basis of proportion of Z's capital to his share in the business. The question clearly states that old partners should make the adjustment to their capital on the basis of capital that is brought in by the new partner, that is Z. Clear? Calculate the amount of actual cash to be paid off or brought in by the old partners for the purpose. Read the question carefully again. Clear? Let's start. Let's see. We'll write down the facts first. There are two partners, X and Y. They're sharing profits in the ratio of 3:2. The capitals before admission is 80,000 and 60,000. Now they admit Z, who brings in capital 35,000 for 1/5 share. This 1/5 share he is acquiring half from A and half from B. Half of 1/5 he is acquiring from A and half of 1/5 he is acquiring from B. Clear? Now, what to do? First of all, we will calculate the new profit sharing ratio. First is calculate new profit sharing ratio. Right? Now, what is the X old share? 3/5. How much he has sacrificed in favor of Z? Half of this 1/5. So I can say 1/10. So this comes to 6 minus 1. 5/10. Y. What is Y's original share? How much he has sacrificed? 110. 4 minus 1 divided by 10, this comes to 3/10. What is the share of Z? Z share is 1/5, or I can say 2/10. So clearly, what is the sacrificing ratio? Oh, sorry, new profit sharing ratio. What is the new profit sharing ratio? This comes to 5:3:2. Is that clear? Now, the next step. The first is calculate the new profit sharing ratio. Second step is calculate capital of new firm. Now, what is going to be the capital of the new firm? Z is bringing 35,000 as capital for his 1/5 share. So I have already told you we can calculate the total capital of firm based on Z's share. Total capital of firm is 35,000 multiplied by reciprocal of share 5/1. This comes to rupees 1,75,000. That means if you take 1/5 of 1,75,000, this will come to 35,000. We are just moving in the reverse direction. We are calculating the total capital of the firm based on the new partner's capital. Clear? He brings 35,000 for 1/5 share, so we can calculate what will be the total capital of the firm. Capital brought in by the new partner multiplied by reciprocal of his share in profit. So the total capital of the firm is 1,75,000. Now, based on this, if this is the total capital of the firm and we have the new profit sharing ratio, we can easily calculate what should be the new shares, new capitals. Right? if we say X, Y and Z, we can easily calculate what should be the new capitals. New capitals means we will divide this 1,75,000, that is the total capital of the new firm, in their new profit sharing ratio. Simple. Now, what is going to be? This is 87,500 and 52,500. Now this should be the capitals on the date of admission of a new partner. What we are doing is we are calculating the total capital of the firm, total capital of the new firm. New firm means including the new partner, and we are calculating what should be the actual capitals on the date of admission of a partner. By dividing this total capital calculated on the base of the new partner, will distribute this capital in the new profit sharing ratio. Because we are saying that the capital should be proportionate to the shares. Therefore, we are distributing this capital in their new profit sharing ratio. That will make the capitals proportionate to their share of profit. Right? Now see, what is the old capital? We have the old capital of X and Y, that is X and Y are already having a capital of 80,000 and 60,000. 80,000 and 60,000. Now tell me who should bring some amount or who should be paid off. The capital, the new capital on the admission of partner for X, it should be 87,500, whereas the capital already is 80,000. That means he needs to bring in cash adjustment. He needs to bring in cash to the extent of 7,500 rupees as capital to make his capital proportionate to the share in profit. And for Y should be paid off 7,500. Because his capital should be 52,500, whereas his capital is 60,000. We will pay him that extra capital. He will withdraw the extra capital from the business, right? And that will make his share of capital proportionate to his share of profit. Right? Is that clear? So that is what we have to calculate, which partner among the old partners has to bring the cash and which partner should be paid. What we are doing is first calculate the capital of the new firm, total capital of the new firm. Now this capital should be proportionate to the share of profit of individual partners. So we divide this capital in the new profit sharing ratio of the partners. Then we see what is the old capital of the partners, old partners. Accordingly, we will calculate whether the old partners will bring in cash or whether they will be paid off. Here, why we are considering old partners? Because we are already saying that the old partners will adjust their share of capital on the basis of capital brought in by new partner. We calculate the total capital on the basis of capital brought in by new partner. Divide that total capital in the new profit sharing ratio to make it proportionate to their share of profit. Calculate the difference with the old capital, whether the amount is to be brought in cash or the amount is to be paid off. Clear? Now one thing here, friends, make an important note here. Now this amount of 7,500, there are two ways. One is, if question specifies then this amount means the amount of this 7,500 adjustment amount. This amount should be adjusted through partners' current accounts. Clear? Second is otherwise adjust through cash. If the question is silent, adjustment is to be done through cash. If the question specifies, then it has to be adjusted through partner's current account. It will be either adjusted through the partner's current account or it will be adjusted through cash. Clear, friends? I hope this topic is clear with this example, that old partners have to adjust their capitals so that the capitals of the new firm means capital of all the partners including the new partner is proportionate to their share of profit. Clear? For that we calculate the capital of the new firm, right? And then we calculate what is the proportionate share of the partners. Clear? And then we compare it with the old capital, right? That what is the old capital already existing, and the balance will be adjusted. Either the cash will be paid or the cash will be withdrawn by the old partners. So if the question specifies, the amount should be adjusted through the partners' current accounts, otherwise the adjustment is to be made through cash. Clear? So in the next lecture we'll do one good practical problem on this method 1 only, right? So in the next lecture we'll do a practical problem on method 1. Clear, friends? So that's it for this lecture. Thank you, friends.